Stephanie, welcome. Good to have you with us. What do you think of what Mr. Diamond said there about interest rates? He says 4 is an easily digestible number. That means 4 quarter points. And so he says maybe even more than that. But I also want you to go back to earlier in that interview where he said some incredibly favorable, bullish things about the American economy.
He did, and I actually agree with him. I think that you have to take a step back. The Fed is doing what they're doing. By the way, they're still very accommodative, right? Because they're still buying bonds, even though the taper is coming down, and they are going to tighten eventually, but the environment is still very liquid. But the reason you have to step back is the reason they are changing their tune is because the economy is strong. We should be normalizing policy. Is that 3 rate hikes? Is that 4? Is that 5? Is that 10? I don't know. We'll have to see. We're going to be data dependent. But when you look at the economy and the data points that are presenting to us, we have strong housing and only likely to get better because pending home sales were the best since May. That's a leading indicator going forward. You have ISMs still comfortably above 50, and that is a diffusion index. Anything greater than 50 is expansion. We've been in the upper 50s, low 60s for months now. That's both manufacturing and services. Auto is running full tilt, and they have supply constraints. They're still 25% below production levels that were pre-COVID. So just imagine when that gets better. And of course, you've got jobs. And I think the job numbers on Friday were much stronger than most people were thinking, especially when you look at the household survey. And then you look at the consumer, which is what Mr. Diamond was saying, super strong, that 70% of the U.S. economy. And there are plenty of jobs. Wages are going higher. Consumer confidence has actually been strong. Retail sales also strong. So I'm totally in agreement with what he is saying about the economy and that the Fed should be acting, especially when you have elevated inflation on top of that.
Yeah. Let's get to a couple of the newsworthy items of the week. There are a couple of economic reports out this week on inflation, to your point. We can talk about those quickly, but I want to not give short shrift to the bank earnings that start coming out toward the end of the week. I believe it is Wells Fargo, Citi, and J.P. Morgan. Wells Fargo is a holding of yours, but the other two, as I understand it, are not.
No. And so we have to get through CPI and PPI. Those are going to be hot numbers. That's already known. Yes, earnings are going to be, I think, strong. My only concern is that these stocks have run up so substantially. Wells Fargo is a restructuring story, but it's also an asset rate sensitive story. For every 50 basis points increase to Fed funds, that's 16% accretive to earnings and 7% accretive to net interest income. So the operating leverage is substantial. But it is a restructuring story, a cost-cutting story. Citi is also a cost-cutting story and a restructuring story. They're just earlier on. I think it's going to take some time, but they're doing asset sales as well, and it trades at 0.7 times book. It's intriguing, Tyler, but I still think Wells Fargo is the better own here, given where rates are going. And J.P. Morgan, it's just a stellar company, but it trades at 1.9 times book. So I like to buy some of the cheaper banks and with some of the stories like restructuring.
And so you like Bank of America, you like also Morgan Stanley, you also like American Express and Pru. Am I right?
You are right. You got it right. You nailed it. I am 600 basis points overweight financials relative to my benchmark. I'm 10 percentage points below my benchmark in technology and comm services. So you can see where I'm tilted. I'm definitely tilted more value, definitely tilted more cyclical, more reopen and those kinds of names. That's not to say I don't like technology. I just think they're going to take a pause here for a bit. I'll pick my spots and buy carefully on that side, too.
Stephanie, you make it look easy. Thanks.